Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Punjab National Bank. Our analyst maintains buy rating on PNB with a price target of Rs 122. PNB reported overall strong performance in Q3 with sharp improvement in asset quality. Net slippages continued to remain negative for the fourth consecutive quarter. Net NPA is now below 1%. The bank has been guiding that quality of loans sanctioned in post-COVID time is far superior with very low delinquency. Thus, lower slippages trend is likely to sustain and narrow the perceived gap in underwriting with respect to peers. Improving asset quality and its continued strong outlook is helping in faster normalization of credit cost, thereby improving the visibility for improvement in return ratios. ROA is set to improve sharply closer to 1% in FY25, driven by lower credit cost. At the current market price, the stock currently trades at 1 times FY25 and 0.9 times FY26 adjusted book value estimates. The stock has outperformed the broader indices in last 12 months. Next, we have an update on DLF. Our analyst retains positive view on DLF, increasing NAV premium accounting given the strong growth potential in residential and scaling up of the rental portfolio. Sales booking remained robust for the Q3, contributed materially by key new launches. Further collection and OCFs saw strong year-on-year growth, while the net cash surplus increased by more than Rs 1100 crore quarter-on-quarter. The Q3 consolidated revenues, operating profit margins and net profit broadly stayed in line with estimates. DCDCL rental income rose 9% year-on-year, while net profit rose by 21% year-on-year. The management expects FY25 sales booking to see a moderate rise of over 15% year-on-year, although the guidance is expected to be finalized by FY24. It has outlined Rs 79,000 crore GDV project launches for 2 to 3 years. Next, we cover Cipla Limited. Cipla has posted another strong quarter of earning growth led by higher traction in key products like albuterol and liraglutide, followed by easing of price erosion to 4 to 6%, resulting into the highest ever sales of $230 million. Higher chronic-based growth in the domestic region and OTC and private-led growth in the South Africa region. A healthy product mix resulted into all-time EBITDA margin of 26.5% during the quarter. Going forward, we believe the company should continue to report higher margins due to meaningful new launches in the US market. The US market is expected to continue to grow on a higher base, led by products like Gadware, which has been filled from an alternate facility, pickup in sales in liraglutide from Q4, increase in market share of liraglutide, 505B2, launch of one peptide in FY25 and remaining 4 peptides by FY27, and recovery in the sales of key respiratory product albuterol. We believe a healthy product mix would likely increase EBITDA margin to 28% by FY26. The stock is trading at an attractive price to equity valuation of 18.6 times FY25 and 17.3 times its FY26 earning per share of Rs 64.6 and 69.4 respectively. Hence, we maintain buy with a revised price target of Rs 1600. Also, we have an update on Chalet Hotels. Analyst maintains positive view on Chalet Hotels with potential upside of 15% in the next 12 months. Chalet's Q3 performance was ahead of expectation due to better than expected EBITDA margins at 44%, resulting in 23% year-on-year PAT growth to Rs 71 crore. Revenue exactly matched expectation of Rs 374 crore. Revenue per room grew by 18% year-on-year. Same store average room rental grew by 11% year-on-year, and occupancy ratio was up by 6% year-on-year. Revenue per room will continue to grow in double digits on back of expected strong room demand. Company plans to raise Rs 2,000 crore through equity issuance or FCCB to reduce debt on books and for future organic and inorganic initiatives. Stock has run up by 62% in the past 6 months and trades at 20 times its FY25 and 17 times FY26 EV by EBITDA.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.